Everybody, good morning, good morning. And we got Gaten, Don, Eric, Stephen, Rex, Larry, Francois, Andreas, Ivan, Dan, Wade, Rob, Dale. Don't recognize your name, but welcome to the stream. Rosalind, Robert, Craig, Amy, Michael, Arturo, Roberts again, Mark, Sergio, Carlene. Hopefully I say your name right. Stephen, Goose is in the house. Lieutenant Colonel, good to see you as always. On Anthony, JB, David, Don, Leah, Dave, Joseph, Emuku, Tony, Carmen, Valerie, Helen, Laura, Ed, Gary. Welcome everybody. War Dog, Maurizio. If you don't know how to chat, like all these people saying, hey, good morning, click the button over here in the corner. Be a chatter on the stream by being a subscriber right here today. That works while I'm live. I'll be live for, I don't know, maybe 45-ish minutes. And then after I'm no longer live, well, you're going to have to leave a comment down below and I'll do my best to get back to you. So anyway, we have ALGOS doing a crazy buy. Rongamer, hope you made it back. Merle, Jan, Alan, Harry, good to see everybody. And welcome to the stream. So we got ALGOS buying. And Friday I was talking about this. Over the weekend, I found they're set to buy $10 billion a day of equities. And it's basically unemotional, too. So we can look at a little bit of it here. And the liquidity is very low, actually. So what does that usually mean when we got low liquidity and lots of buying? And then we have the $5 billion of authorized buybacks on top of that. So we got $15 billion a day, at least for the next 2 weeks or so. That can be pretty powerful, pretty powerful here. So we're seeing that the algos de-risked largely, and now they're ready to set and buy. So they had sell, and now they're buy. I mean, it's just, that's the Jim Cramer poking fun there, you know. Sell, buy. And now, I mean, CTA positioning liquidated pretty severely. There's the zero line right there. Come on across. It's not drawn, but you know, right there. This is the wrong browser. I don't have the plugin to draw. And so the pain trade right now is higher, according to Morgan Stanley. So this is something to be watching out for. If you got super short, watch out for the buying right there. So there we go. That's the thing to watch out for. $10 billion a day of non-emotional. I mean, algos don't have any emotion to it at all. So non-emotional buying. And then we have the $5 billion a day of authorized buybacks. I think that's kind of averaged, you know, probably ebb and flow a little bit. And all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. I may never get another one of these things right again. This presentation, intended to be informational, educational, fun, and entertaining, is not a recommendation to buy or sell any financial instrument. If you desire personal financial advice, hire and consult a financial advisor. And, you know, I keep seeing all this about the Japanese carry trade blowing, like, it's coming back around. It might blow out. And it's like, it's kind of like Chicken Little, you know. You got to be careful. If you, in the charts, while we may see a little flash down, the charts may not be supporting going down if we break higher through the resistance. So this is one of those things. You got to be very, very cautious. And we're still right on the edge of the danger zone. And this week, not a lot happening today. Not a lot happening tomorrow. We do have the Jackson Hole Symposium getting going. We get the FOMC minutes on Wednesday at 2 p.m. while the market's open. We basically know what they already said at the last meeting. So don't get confused if anybody tells you it's FOMC day. It's not. These are just the minute release. Now, it can cause a little bit of... It could be the reason for the catalyst or whatever that the mainstream media reports, but it's unlikely to be much of anything. And then we get the Jackson Hole Symposium coming up, starting on Thursday, and then Friday, and into Saturday. So we may see a release right there on Friday, but it may be on Saturday, so it may affect us next week. Right there. Kimberly is here, my favorite subscriber in the whole world. My lovely wife, Kimberly, is here. Glad you made it. Glad you're feeling okay today. And I'm sure you'll say, so. We get Fed Chair Powell speaking during that symposium right there on Friday at 10 a.m. right there. That will be an interesting event. So you get one day at Jackson Hole, and then Powell speaks right there. These are Eastern times. And then they wrap it up down here on Saturday. They fly all their fancy jets out there and go meet, talk about it, blah, blah, blah. What's our plan for the year? Blah, blah, blah. And yeah. So there'll be some late week fireworks potentially. And I don't expect the market to do a whole lot. I mean, we're probably going to grind higher based on that into those, and then we'll see what happens. Kind of depends on the support resistance zone. So we're pushing the S&P right up to the limit, right up to it. Haven't gotten above it. It's an important point. Right up to the bleeding edge, but we didn't break through. We've seen it before. It. Need to be cautious right there. That's the line. We got to get through it. Got to get through it. Yes, over here, right up to the bleeding edge. You know, see, we had that little spike higher. We haven't poked. We haven't even tried. Right there, that little spike higher. My red zone didn't quite make it all the way up there. We have not broken through that yet. Let's set another alert. I have an alert on up there, but I'm going to set an alert right on the bleeding edge. So if that kicks off, be aware. We were grinding right there. We tried to break out last night. Jumping on down, 15 minutes. Look, right here when the futures reopen. Right there, 6 o'clock. Sunday, spike up. Grind. Hit about midnight and pulling back. Came back right into the 15-minute roadmap line where we tested on Friday right there. We can hold it. Break on it through. Come on, baby. Let's do it. So market opens here in just a minute. Like 5 minutes, really. And there, surprise, there were not many market movers today. Hardly anything moving up or down $2. So I brought a wealth of bonus trades, like a whole bunch. So stick around. We'll go through all of them, pull up the stats. So I have a bunch of bonus trades. Now, but the bonus trades may or may not be great. So they're all entries, and we'll go through which ones have historically worked and which ones have historically not worked. And we'll just kind of run through it. All right. Does that sound good to everybody? Let me know how excited you are in the chat. I see. And so sitting there right below resistance. But we're still in the danger zone. I outlined this however long ago. Gosh, back when we were plummeting out 2 Mondays back. I outlined this zone. Said we probably retrace up here. We held for like a day right at the middle. Now we've pushed up to the top. Held there Friday, Sunday. Now we're coming in today. Can we break through? No, they're not Apollo alerts at all. They're powered by the same algorithm that runs Apollo, but they are not Apollo alerts. All right. In queue. Made it into the danger zone. Sitting there. Hasn't been able to break through. And that one has this high right here that we've got to beat. Right there. On Friday, I said maybe we're waiting on this one. Or I guess maybe it's Thursday. Maybe we're waiting on this one. So now we've got both of those aligned. So now maybe we're waiting on this one. Maybe ES and NQ grind until this one pops. So if this one pops right up here and stops, that makes all three of them aligned. All right, if these two don't go ripping off and this one pops up in here, be careful. That's when all three of these indexes come into alignment. When the stars have aligned and they're all in the danger zone. Oh man, Amy, thank you so much. Thank you. So when all the stars have aligned and we're in the danger zone on all three indexes that I watch, be careful. And I don't really watch this one, but same situation. Danger zone's right up here. We got a little bit higher on the way down on YM. I know some people like to look at the YM. That one has a spike right up there. This is the Dow, just in case you wondered. I don't usually watch this one, but that one has a much higher spike right up there at 41,000. And we're just kind of stalled right here. That did get above the 618. It's going to push it to the extreme. That may push it to extreme before it rolls. So I don't like this one because it's so manipulated. The numbers don't mean anything. Like the components are all just crazy. And the biggest, yeah, I would, except that's copyrighted music. And, you know, YouTube will ding me for copyrighted music. Anyway. So that makes four different potentials right there. Jump it up, look at the S5FI, or S5TW. Stocks above the 20-day. We missed the bottom and almost back to the top. So this may come right back up here one more time. Maybe even make a higher high. Higher high would kind of make sense at this point. Kind of would. So this is a giant market oscillator. If you've never seen this before, this is S&P 500 stocks above their 20-day. This is not on all platforms. This is an index, not a tradable stock. This is kind of like a measure of, I know it's on, you can pull it up on TradingView, S, Sierra, 5, Tango, T, and W, whiskey. You can pull it up, S5TW, right there. Stocks above the 20-day. It's just out of the 500 stocks, what percentage? It's broken down to 1%. We don't typically break out higher than 80, or at least we don't hang out there very long, and we don't typically hang out very long below 20. If you've never seen this before, it's kind of a cool market oscillator. See how we're running. We're running a little rich when we're hanging out at the top. The market likes to, look over the long term. We spend a lot of time in the middle, not very much time at the top or the bottom. Now, looks like we're going out the top. Maybe make a higher high, something higher than we've been all year, basically. And then S5FI, stocks above the 50-day. And there's the market open. I've commonly been holding that we're probably due for going to the bottom. This has been making lower highs since all the way back here. Lower high, lower high, lower high. This may come up again, make a lower high. This is stocks above the 50-day moving average right there. Man, look at all these alerts firing off. EQT was a sell. XLY. That's that entry I was looking for. That'd be an entry today. And DHI, or after today, I guess. DHI was a sell. DHI was a sell. ZIM was a sell. Google. There's a day trade on Google. And Tesla, day trade. And there you go. That was all the alerts that fired off right at the open. So S5TW, or S5FI, Sierra 5, Foxtrot, India. Stocks above the 50-day moving average. We've probably got a date with the bottom, sooner or later. Seems to be later because we've been came up short in April. And we've been making higher lows and lower highs. So this is like a watermelon seed squeeze on an index. I don't know. We'll see what happens. Maybe chaos. Usually when you squeeze something, especially watermelon seed, it pops and you never know what direction it's going to go, right? I mean, some people, I guess, are pros at getting it, but most of the time, whenever I do it, like, I never know where that sucker's going. So when you squeeze one of these, it could pop up, could pop down. Be careful. Down is where we need to go. We haven't been down there since October of 23. Getting close to a year ago that we were down there. So getting close. So we're already near the end of August. It will be September, and before you know it, and then what's after September? October. Be careful. Be careful out there. And then stocks about the 200-day. We've just been grinding in this top area right here. Look at this. This one's even slower because it stocks above their 200-day moving average, right? We were up here, then we were down here, then we're up here. Eventually, we're probably coming back down here. Maybe next year? I don't know. We'll see. If we get a big market crash, big push out, we may go faster. So, I wouldn't say manipulated. This is hard to manipulate. This is 500 stocks. So, all right. Now, YM is highly adjusted, you might say. Now, this one's interesting. Did I draw my downtrend line a little too aggressively? If we pull it right down there, maybe ignore that little green candle back there. Ignore the green. Just kind of connect up as many highs as we possibly can there. And maybe we're set for a bust out. We've got to get back above the roadmap line. If we break out above this prior high right here, I'm actually going to set an alert. We're probably going ripping off. And it's to be in. So there's a closing trade. This low, this high. Look at what we're doing. That's a measured bounce. All other things negated off this chart. That's a measured bounce. Just remove. Just keep clearing some stuff off here. Clear it out. All right there. The simplest, easiest thing right there is a measured bounce. Could easily take us right up to the target zone right there. So if we break out above this high right there, we're probably set for a big rally right up in this area right there. Now, if we reject off of that, going down. So it looks like we may pop. If we just break down below this, well, target's on down there just a little bit. Right there. Or in that 65 to 68 zone. If we just break down below this low. If we bounce here, break above that high, probably coming right up here. Around this 88 to 92 area. Find resistance, then we may pull back again. May come back, retest this same $80 area right here on oil. GC, opening up high and retracing it back down. Came up just shy of the 2570 area I've been looking for. Gosh, seems like almost a year now. Been talking about it for a long time. 2570. Probably get there eventually. Bitcoin, just churn and burn. Did we get the... Oh, we did not. Crypto power plays, I was looking for that to be a green close. Usually when we get 3 green days in a row, this is a weird thing. Nobody else talks about this. And just something I noticed. When we get 3 green candles in a row on both Bitcoin, spot market, and Ethereum, spot market, which, look at that, both of them turned red. We had 2 greens. We had when I did my update yesterday morning, we had 3 greens in a row. I was like, if we can close it, that usually kicks off 7 to 14 days of bullish price action in crypto. Unfortunately, it broke the pattern. Now we got to wait Need 3 more green days. So those, man, way to mess up a good thing. Anyway, dollar pushing below the low. We get a close down here, probably going on down. Probably setting the stage for the bigger drift on down here eventually on the dollar. And for everybody talking about the carry trade, here's your Japanese futures. Resistance at the roadmap line. What did I say all the way back down here, like Wednesday on the 7th? I said we'll probably rally up to the roadmap line and then sit there, maybe bounce off, maybe break through. It'll be a resistance. Here we are, the third day, hanging out up here. It's like it's magic, right? Sometimes I get lucky. And I didn't trade this or anything like that. I just, just watching it. And if I do it the right way, I can never remember which one goes first on USD, JPY. That one didn't even get near the roadmap line. And it looks like it's coming back down. So this is probably the chart that's got to be freaked out right here. That missed the 618. So opportunity for that to dip down a little further. How could you trade it? This is probably going to pop on up a little bit higher on FXY. So, yeah, I mean, the carry could unwind some more. And if it actually does start being a big problem, now here's the crux of it. If it really does start being a big problem for liquidity in the United States, not just like burning down the market, but if it starts being a liquidity problem for the United States, what's going to happen? So the whole, most of the money that Japan's the biggest investor in U.S. debt. If Japan freezes up because the carry trade blows out because of the interest rate differences, the United States government, the Fed, not the government, but the Fed, will be almost forced to raise rates to keep the carry trade alive so that the United States doesn't become insolvent because our debt market freezes up. This could happen right here. It's not the carry trade blowing up necessarily. This is the fallout of the carry trade blowing up, that we would have to raise rates to keep the carry trade alive. As Japan raises rates, we have to raise rates so that they can still keep the carry trade going. Wow, is that the black swan? Is that the thing that wrecks us right there? If these, what happened down here when the rates raised really fast? What happened down here? You remember what happened there? Fed didn't care. The U.S. market was dropping. Right? The Fed doesn't care about the stock market. I'm just telling you, they care about liquidity in the global markets. And especially being able to sell, the Treasury being able to sell the debt. If our biggest customer can't buy the debt because the interest rate spread's not good enough, what do you think they'll do? What do you think they'll do to keep the interest rate spread alive so that we can keep selling debt and not become insolvent for our government? Right there. I don't think they can lower the rate. All right. I don't think they can lower the rate. I think they have to keep the rate high so that the carry trade stays alive. Because if they don't keep the carry trade alive, who's going to buy the debt? I mean, I drew this on the chart. Drew this on the chart back here almost a year and a half ago. We weren't even up here yet when I drew it on the chart. Now, if you've never seen this before, this is the 2-year constant maturity rate, DGS2, Delta Golf Sierra 2. And to create this chart, go to Trading View, type in DGS2, bring it up. It'll give you the blue line. This is the real market rate, the 2-year constant maturity rate. And to create this chart, you push the button up here that's compare, and you type in FED, FUNDS, Foxtrot Echo Delta, Foxtrot Uniform November Delta Sierra, Fed Funds. That creates the orange line right there. That's the, when they talk about the Fed rate, that's the orange rate. Now, they're always chasing the market rate. If this market rate needs to spike, be careful. Be careful, be careful, be careful. All right? And the Treasury is the government. The Fed is kind of this independent quasi-government entity out there. So be careful. Be careful. Yeah, Thrifty. I mean, it's important to know your players and know what they might have to do. Backs against the wall, they might actually have to raise rates to keep global liquidity rocking and rolling. That's the potential bad I see right now. I know, Skaggs, if you've been wondering what might happen, there you go. All right. Got my eye on it. I don't think it's there's some doom and gloom and some chicken littles out there like the sky is falling, the sky is falling. I don't think it's a problem yet. It can become a problem pretty quickly. But I don't think it's coming apart yet. I don't think the wheels are going to fall off the bus yet. Now, stuff that was popping, getting into the gainers, there weren't very many, just a few. And UHTR, let's just clear this chart up. Where are we on the daily chart? Well, had this high, this low. This is a pharmaceutical. So, there's 4 things that don't commonly follow my pattern. And the main pattern I'm looking for is the market roadmap or a measured bounce. 2 main patterns, right? If you want the roadmap line and know how that works, click on the button down here after the video's over. Click my name, go to the channel homepage, the one that's my favorite indicator. Watch that video, explains the market roadmap, gives you the code, all the stuff. I probably should do a new version of that. It's getting to be a year and a half old. I mean, it's basically the same information. Now, I look for that pattern every day. I use tools to find that pattern, and here's one right there, and we popped up to the extension target. And what do I expect from here? Well, we could get to 382, but I expect a retrace back to the orange line after doing that extension right there. Off these lows, pretty tired. Now, like I said, I kind of skipped around. There's 4 things that don't commonly follow pattern. One of those being biotech, pharma, medtech, anything the Food and Drug Administration of the United States is involved in, pharmaceutical being one of those, don't always follow the pattern. So this can just do a crazy move, a wild, get a wild hair and just go ripping off and do something different. So the other 3 things, low price stuff, that's equities, not futures, not cryptos, not whatever. Equities, stocks, under $10 or around $10. $10 and under. That's number 2. Number 3, leverage stuff that has leveraged. We look at this, it says 2x bull, right? On Tesla, that's leveraged. All right. Any stock that's got leverage on it, we have things that are 3x leverage, 2x leverage, 1.5x leverage. Things that are leveraged don't always follow patterns. And then number 4, China stuff. They have a different sense of morality, and they play by different accounting rules than U.S. companies. They're listed in the U.S., funny enough. So sometimes I've gotten burned a couple times. And so stove's hot. Only takes a couple times learning that lesson for me. And there's other stocks I don't trade. I don't trade Meta. I've been burned too many times. I don't trade Lulu. I've been burned too many times. I've never made money on a trade on Meta. I've never made money on a trade on Lulu. So after a few times, you just don't trade those anymore. They go on the blacklist. I'll talk about them, but I don't trade them. So this one getting close to breaking out. Got to break above that high and get going. DOYU. That looks like it's ripe for a retrace. Be careful chasing that one. Resistance at that prior high. There's going to be sellers that step in. It's almost inevitable. We get back up there, be sellers, slam it back down. People, bag holders, been sitting there for almost, gosh, what, year and a half? They're like, I just want to get my money back. If we pop up there, there'll probably be sellers. Ulta. Wow, nice. Nice potential. We got to break above the roadmap line right there and get going higher. So we got to break above this. Got that resistance in there from the gap up and the gap down. Resistance up there. It's got some stuff to work through, but if we can get going, and we didn't hold the measured bounce at all. Man, what a correction. If we can get going from here, break back above that 618, possibly 611, 644, 732 on the upside. That'll be pretty wild, but watch for the breakup of the roadmap line and then the 618 up there. We held extensions pretty nicely, so that's the next resistance right in here. See if we can break through it. And then the next one right there, that gap down. And then we can set the stage to go higher on Ulta. ALZN, garbage. Absolute garbage. Pharmaceutical, reverse splits. So there's something I call dumpster fire when a stock does. I mean, when you zoom out and look at this thing, when it's doing this right here, and we got a reverse split. If you've never seen a reverse split before, these numbers are supposed to be the other way. It's supposed to be 15 for 1. Like in video over here. 10 for 1. That was a normal stock split. This one right here did what we call a reverse split. That means you had 15 shares and now you got 1. And then they did it again. You had 10 shares and now you got 1. So you multiply those together. Over here you had 150 shares, now you got 1. All right, that's what causes these extreme drops in stock price because it was never 110. All right. And it keeps approaching 0. And I call them a dumpster fire because that's a dangerous thing right there. Absolutely dangerous. It can go out of business. And they probably make no money. Yeah, lose tons and tons of money. And money's expensive right now because of interest rates. They're expected to lose way more money. So be careful on that one. GovX. I can't say that without thinking about the... look at that. 1 for 2,000. Holy moly. 1 for 20. God, that's another dumpster fire right there. 1 for 15. So you used to have 2,000 shares, then you got 1. You used to have, after that, if you had 20 shares, then you got 1. And then after that, if you had 15 shares, now you got 1. So whatever that multiplier is, you have to multiply them together. So that's 2,000 times 20 times 15. What a multiplier. Like 100,001 right there. This thing probably used to be like $100,000. Somewhere ridiculous out here. $20,000. But that's the multiplier right there. 2,000. Whew. Then the 20. Then the 15 over here. That's a dumpster fire. Yet again. I even got a thing for it. Don't mess with this. It's just dangerous. Like that pop is probably going to come back to the bottom. It's unlikely that they all of a sudden solved all the world's problems. I got a monkeypox, whatever. Be careful. VRAX, it's probably another. all these like biotechs working on monkeypox vaccines, probably gonna pop, and then whatever happens, and watch out for that to get all wrecked again. ZIM. Golly, what a nasty chart. What a nasty chart. Didn't hit the support here. That move up, that retrace, stopped at resistance. Didn't quite pull back all the way to the support, and we could push out a little higher, possibly up to 30, but low probability at this point. May go lower. This is a pretty nasty chart. Pretty nasty chart. They did make some money. Lost a bunch of money. And almost broke even. Making a little money. Expected to make some more money. I don't know. That's a weird one. ZMD. Pulled up the wrong, not AMD. ZMD. Yep. Not gonna be the right one. I don't know what that was supposed to be. Google. So this came down to the roadmap line, holding for all those days. We can break back above this gap down, go cruising on up to 200 area right up here. 196 is 90% of the way to the 1272. That'd be a conservative exit, and 1272 right up there. TEM. Well, there's not enough candles there to do anything, so lost a bunch of money. Be careful. Decliners, LQDA. Oh, ouch. And that can come back down to the lows. Losing tons of money. Shake Shack. That's probably set to eventually go up here to 116, 120 area right there. WD stuck under the resistance here. And there is the resistance. There is the support. Could be a measured bounce. This is opportunity. Opportunity. Where opportunity meets preparation. Sometimes I get lucky. So we've got this set up right here, potentially to blast out of here. If we can get above that resistance, potentially go up there to 424. That'd probably be pretty spicy. Almost a double just on shares right there. CING. Well, there's another dumpster fire for you. You got to be careful on the days where these show up in mass. Things are questionable. Golly, man. 20x and a 12x. That's 240x divisor right there. Like you're 240 shares, now you're down to 1. Yeah, if you had 240 shares over here before this split, now you got 1. That sucks. And EDU. Grinding underneath the roadmap line. This may go back down lower. Right there. Be careful on that. All right, bonus trades. So I've got a long list here, as I said. Go through a few of these. And AAXJ. You may not have ever heard of this. Right there. Potential to rally up here. There was the entry. Today is the entry, really. I mean, that was the trigger on Friday. There's the entry possibly today. 76 on the upside. Right, 76.97. That's your target right there. Bouncing off the roadmap line. AMP. So this one, there's your high. There's your low. Kicking her off. There's your target right up there. We can talk statistics here in just a minute. I'm going to run through these and then we'll go back through them again. So stick around here a minute. Stick around. And if anything, if you like anything I say, make sure you give me a thumbs up, support, hearts, whatever it is on the live stream. BLNK or BLKB. BLKB. Let's just remove all this. Remove all these drawings. So this is what this has got. It's got that high right there. My tool found that setup right there. Potential to go up to this 82 area right there on BLKB. CDE. Thank you. Pull this over. This high, this low. Closed above. Entry, $7. Low price stuff. Be careful. That's not a big move. It's like $1. I mean, dollar move. Hey, on a $6 thing, that's a big move. I mean, we're talking about. People tell me all the time, well, I can't make any money on $1 share. Look at that. That was 17%. Put like 6,000 on it. I mean, that's 17% on $6,000. Took 60,000 on it. 17% on 60,000 bucks. I mean, don't give me that crap like you can't make money on $1 move. Like, it's not a big move, but it is a big percent move. CRK. I get really upset about the people saying you can't make any money on shares. You can absolutely make money on shares. This one right here, 13. DFIS. This high, this low. There's the close above. 27. That's a pretty fair one. 26 to 27. That's a dollar move. That's a smaller percent right there. Like that dollar move. Now, a dollar move on like something that costs $300, that's a different story. All right. Like that one's only a 5% move. All right. DFUV. That one, 42. It's a $2 move. 4%. DON. That high, that low. Potential to 51. 5%. DSGX. A lot of people invest in dividends for like 2% a year. So definitely be careful. Like these can last a little while. 6.5%. EPOL. We'll talk about how long they last and all that sort of stuff here in just a minute. And this one, I bet my tool found that one. And 26, potential upside right there. Potential 5.5%. EWY. South Korea. This high, this low. Closing above. 71. 8%, not too bad, not too shabby. GDXJ, junior gold miners. A few gold miner things showed up here. This high, this low. Potential right there, 50 on the targets. If you're enjoying this, let me know in the chat. If you don't enjoy it, well, I don't have to do it anymore. And GDX. This is 3x leverage on gold miners. Be careful here. This high, this low. Setting up an entry right there. I coded a new tool that finds all these every day. 20% right there. 20%. Should you trade options on this? Absolutely not. That's freaking dangerous, all right? Leverage cuts both ways. Be careful on leverage. But 20% on shares, that's pretty nice. Pretty nice potential right there. All right. GLDD, this high, this low. Potential to break above right here, 10. That I missed the low. It did close above that. And 1032, potential up there. The upside, it did pull back a little bit. So the upside possibly 13, 14%. IEUR. I wouldn't just go buy these yet. Let's talk about statistics on these here in just a second. That potential 61 right there. That's only a 3.8%, only 3.8% upside. IEV, that high, that low, potential right here. They're, not all moves are created equal. That's a 4.4%. But these are things that don't move a lot. I mean, right there, and these do pay a dividend too. So keep that in mind. Got this potential right there. About a 5% move. JNUG. There's junior gold miners with some leverage. Right there. So if you don't like GDXJ, here's JNUG. Potential. I do have a target up here too. So JNUG. 18% potential upside on 2x JNUG. KTOS. this high, this low, closing above, potential for this to rally on up here, like that, 11%. Live Nation, coming back from the dead, possibly. It's going to be that high, this low, closing above, 101. That's a pretty nice one. Pretty nice one right there, 6%. MDY, that one already came across the list. Look, wow, that's some big numbers right there. 5% upside on a $500 stock. MDYV, mid cap. Maybe you've never even heard of some of the stuff, and that has the potential to rally from here up to here. That's about a 5% move. MPLX, this right here, close above 43 is the target, right up there. Only about a 3% move. There's a little fly flying over in here. Surprised that has kept hanging out in here. That retrace closing above, potential to go to 8. This is low price stuff. Be careful. It's an 11, almost a 12% move. RETL. This is retail. 3X bulls. I'm not sure which high the target would have picked, but let's go with that one. Nope, wasn't that one. It was that one. It was that high right there is what it picked. Closed above and 1134. SWKD. Let's just remove all the drawings. This high, this low, closed above, gapping up. That looks pretty sweet to getting up there to the target right there. 670. Sony, we're almost done. Almost done. Then we'll go look at the historical. That one. Look at that. Beautiful. I already drew that one as a potential. There, 99 on the upside. That one came across the list before. That was a 10% upside. SYK. It's actually picked up the smaller swing. Right there. Potential to go to 356. About a 5% upside. And TRDA. Potential to go to 18. There, about 13% upside. All right. So statistics on these, right? All right, JT, great. You've got all these. How and the devil, do we know which ones are great, which ones aren't great? Well, let's see if we can figure that out really quickly. I created a tool that kind of does this. Funny enough. So let me scroll back to the top because it jumped channels when I switched. And here we go. Show you a little bit of my Discord magic here. So AAXJ right there has a historical win rate of 42%. So not the greatest. Profit factor is negative. Under 1 is a negative profit factor right there. And AMP, 70% win rate, profit factor 1.5. So that's pretty profitable even at a relatively lower win rate. There's the AMP setup. BLK, potential $4 upside. Historical win rate 76%, 1.4, pretty strong there. And CDE, historical win rate 69%, 1.2. And it tells you right here on here, it tells you about how long they last on average, over how many trades are in the database right there. CRK, 71% of the time. That one's a negative profit factor, so the losses are bigger than the gains in the history of 21 trades since 1987. This one has a historical win rate of 0. It's never won one in one trade since 2022 when it came on, when it was listed. And DFUV, 100% win rate on 2 trades since it was listed 2 years ago. I mean, it may work. I mean, do you want to bet on 2 trades being statistically significant? Usually 30 is a statistical population. DON right here, 78% of the time. Now this one's looking a little better, almost a profit factor of 2. So that one looks, Dawn looks like it may rock and roll. And then DSGX right here, a 92% win rate on 25 trades. That is a strong player right there with a 3.8. That's a strong one right there. May not have a giant upside, but it's got a nice potential to actually work out in your favor right there. A 92% historical win rate, nice fat profit factor. 25 trades since 1999 when it was listed. That's a pretty nice one. Historic win rate, 36% with a negative profit factor on 11 trades since 2010. That one probably more likely to fail than it is to work out. Now, it has worked out sometimes in the past. So past performance, not necessarily indicative of future results, but that one's been unreliable. This one right here, EWY, 71% win rate, 1.5 profit factor on 21 trades since the year 2000 when it was listed. Not too bad, not too shabby there. This one, GDXJ, 75% of the time on only 8 trades though, since 2009 when it was listed. I mean, the profit factor is not super big either, so be careful. That one could fail. Fails about 1 out of every 4 times. GDXU, this one's been 100% of the time, but only on 1 trade in the last 4 years. You want to bet on this being number 2? It might. It might. 62% win rate right here. GLDD, not the best. And it has a negative profit factor. That means the losses are much bigger than the wins. Be careful. 16 trades since 2006. 33% win rate. Negative profit factor. That one looks like it's more likely to fail than it is to go on up to the target. And this one has a 55% win rate and a negative profit factor. Losses bigger than wins. And that's on 20 trades since the year 2000. So this one failed. This one's kind of like a 50-50. This one's kind of a coin flip. Like maybe it'll go up. Maybe it won't. And 72% right there on IJJ. Profit factor 1.3 on 25 trades since 2000. Not bad. Not bad there. JNUG. 100% win rate on 1 trade since 2013. So this is the rare second trade that it's ever done in the last 11 years. It's a pattern that doesn't show up very often. I wouldn't put like one time it's worked out in the past. One time it's set up in the past. I don't know. That's I may allocate a smaller chunk of capital to something like that. Unless you really believe it's going to go ripping out. KTOS, 61.5%. Extremely negative. Look at that. The losses have completely eaten the wins on 13 trades since 1999. Whew, I don't think I would touch that one. And 76% win rate. Losses and wins are almost the same size on Live Nation on 21 trades since 2005. This one's kind of choppy right there, and it may not work out. That means it has a higher probability to win based on the historical pattern, but the losses tend to eat up all the gains for the ones that fail. MDY, 74.29% of the time it has worked out. Profit factor almost 2. 35 trades since 1995. That one's pretty solid, actually. That one much better than some of the ones above it. MDYV, pretty similar stats there. Very similar. And MPLX, 70% win rate, 1.5, 10 trades since 2012. And 81% of the time, NR has worked out. Not too bad, not too bad. 22 trades in the history since 1968. That wasn't when it was listed. That's just when the backtest data started. So 1968 was the furthest I could pull back for most tickers. There's a few tickers that go back to 1960. And the average ticker in the database of 3,600 tickers was listed in 2003, I think it is. 2003. Right here, 72% of the time, 1.3. Not too shabby. Not too shabby. This one's won 100% of the time on 1 trade. Maybe Maybe not. Maybe not where I want to put my money at risk. This one right here, historic win rate, 84%. Look at that profit factor. Sony is probably going to make you, I mean, it's more than likely to make you some money right there. 32 trades since 1970. That one's probably going to go up, like, has a high probability to get continuation up to that target right there. Pretty darn sweet right there. SYK right there. 77% of the time profit factor. Not quite as strong as Sony's. 40 trades since 1979. So it's pretty reliable. Maybe not as reliable as that one, but has a lot of trades. Sets up and wins 77.5% of the time. TRDA. That's a 50-50 with a negative profit factor. That means the losers are bigger than the winners. Anything under 1 is a negative profit factor. And 2 trades since 2021. And there you go. There's the list. So hope that was beneficial. Let me know in the chat if you like that kind of stuff right there. It's a neat tool I've built. It's very similar to Apollo. Runs the same algorithm, but it's different. They're different trades. Different trades. These last a while. CRWD getting up near the roadmap line. This may be a measured bounce. If it does the measured bounce setup, 600 is the target right up here. All right. Hope you all enjoy it. The bias for the day. Cautiously anticipating this breakout. If we can break up, get a daily close up here in the clear air, probably going to rally on up here to one of these targets on the S&P. Like I said, I was warning about the crash potential. I didn't want it to happen. I wanted this to happen. I actually want this target right here. I want that right there. I want that right there. That's what I want to happen. I would like to see this target up here because I've said 6,000 for a couple of years. It would be a shame to come all the way up to 56.71 and miss getting the last little bit to 6,000. I want to be right. Imagine that. Yeah. All right, everybody. Have a great day. Be safe out there. I'll be in Discord if you need me. Probably working on some more cool tools. I got a whole nother layer. Whole new thing's going to happen to Apollo that's going to make it, hopefully, if it works out like I kind of think it might add a whole new world to that whole system. So, all right. Have a great day out there.